what we often talk about is what this is designed to do is to take you to where you can literally become your own bank. And we're talking about where you can go to, from where you enroll, you're going to learn the tools, and then you're going to profit off of the strategies that best fit your personality. And if you can bear with me for a moment, because what I'm trying to share my screen. So just bear with me. I'm trying to share it, so just give me a moment as I'm pulling this up. And if everybody can make sure you stay muted. Okay. Okay, I'm sorry. It's taking its time and me trying to share it, but want to make sure I am sharing the right information with you all this evening. So what I want. Okay, here we go. You should be able to see the screen now. What I'm sharing with you is the web analyzer. And when we dove in here a little bit last week, I covered the web analyzer. And we're going to start here again this week. Now, when you enroll, this tool is so valuable. Now, what this web analyzer does is it allows you to begin trading while you are still learning the process and you're still learning the skill set. So I'm going to go over this part again. So one of the things that you do is when you log on, there are many different strategies. Now, this is what we mean by the strategies that best fit your personality. So there are many different strategies within this web analyzer. So in this web analyzer, one of the ones that I do believe is great for beginners, and this is one that helped me out tremendously, is the Sharif strategy. Now, we've talked about the bounce back. We've talked about Davenport rules. We've talked about quite a few, but I want to talk about, and I want to focus on the Sharif strategy right now. So when you log on and you select a strategy, now this Sharif strategy, I'm going to select and I'm going to save it. And I have to, now it does say save for mobile right here, but for some reason my computer, because you should just be able to save settings and reload. So if I save the settings and I reload, what happens is these settings are set. And now every trade that comes in, I'm going to analyze this trade with the Sharif strategy. Now, what am I looking for with this Sharif strategy? What the web analyzer does is it makes it simple. It makes these trades simple. So when I look to the right, what happens is I'm getting trade alerts. I'm getting potential trades. I'm seeing trades. So I'm seeing that I saw a potential sell that came through. And I see that it passed about 6 minutes ago. I see a potential buy. I see a potential sell. So all of these are trade alerts that came through. Now, what am I going to look for? So when this looks, I see this potential sell on a Euro GBP, and it's going to be on the 1 hour chart. So what happens is all I have to do is I'm going to click right here and it's going to automatically pull it up. Now I'm looking, my setup is already there. Everything is set up, but I'm going to tell you the adjustment that I made. The adjustment that I made, this is what we're looking for, is the Bollinger Band, the RSI. Now, the RSI is my relative strength indicator, and that's going to measure my momentum. Now, I changed the settings. So I'm going to show you what I changed and why I changed it. Because I want to maximize the pips. I want to maximize how much I can make off of this. The normal settings is going to be, the default settings is going to be 70 and 30. I changed this to 80 and 20. Now, I did that because that's going to give me a greater, it's going to allow me to maximize my pips. And I'll show you why when I go back on the screen. Now, and I'm going to save it as my default. So that means every time I click on there, because I've already done it, so I'm going to cancel out, but you want to save that as your default. So if it was on 30, it would be up here somewhere. So, but, and you'll see why in just a moment. If it was on 70, it'd be down here somewhere. Now, and this is my stochastic. This is a stochastic indicator. This is also going to measure the momentum. And what this indicator does is it's measuring, it's comparing the closing price and the moving average. Okay. And once again, this one is overbought, meaning that it had more people purchasing. Above 80 and below 20 is oversold. So these are the things that I'm looking for with this trade. So when I look at this trade, we pulled it up. They're telling me it's a potential sell. So this was caught about 8 minutes ago. Now, how do I know if this is going to be a good trade or not? So I'm on an hour chart, but I'm just going to show you a couple indicators just to kind of show you what we're looking for. Now, let me find my thing I'm looking for. Now, first thing I want to do is I want to make sure that this is pushing out of the Bollinger Band. Okay? It has to push out of the Bollinger Band because I'm looking for a sell. I'm looking for a sell. So this is my Bollinger Band. I want to make sure that it has pushed out of my Bollinger Band. Now, right here, we talked about 70. It's up around 70, but for a better trade, I want it to be around 80. And as you can see, it did not hit that 80 mark. It's not up there. But the stochastic, my stochastic is above, the stochastic is up above the 80. And what else I'm looking for with that stochastic is I'm looking for that blue line to cross. I'm looking for that blue line to cross over the red one, because that red one is that moving average. I'm looking for that blue line to cross over. And when it crosses over and starts headed in and down, because I'm looking for a sell, that means that it's headed in the right direction. However, I do not have all three indicators, which means that I do not take this trade. You do not take the trade until everything is aligned, until everything is lined up. So you can either wait or to see, does the trade line up, or you look at another trade. And but look how many trades come through. Look how often they come through. This 10 minutes, 10 minutes, 15 minutes. So you're consistently getting trade alerts. So if this was on a 5-minute chart, where did I click this one? USD JPY on a 5-minute chart. So if we're still looking at the Sharif strategy right here, this was about, so this trade was called somewhere around here. So once again, this happened. This wouldn't be a good trade to take. But let's pretend that this trade this was called back just a little bit. Let's say it was called a little bit, and we're looking for a buy. This would actually pushed outside of the Bollinger Band. So because it pushed outside of the Bollinger Band, that is a good indicator, because you want it to push. We want that momentum, because if you notice, every single every single candle, we stay within the momentum of the Bollinger Bands. That is so very important. We stay within the momentum of the Bollinger Band. Now, so that's important. Then we look down here, right? What happened is we got close to the 20. So if you decided to take that trade, because it's between the 20 and the 30, you can get a good 10 to 15 pips if it's down to the 20. But look down here, the blue line did cross and it's headed in a buy direction. But you can get normally you can get about a good 10 to 15 pips. But looking at this, I wouldn't have taken it. But let's look at a good one. Let's see, do they have a good one on here? Let's go back up. I'm going to find you a good one to look at because I want to show you one that's a really excellent trade to take on this strategy. And I saw some earlier. I just have to remember which ones I was looking at. Okay. Right here. This actually pushed outside of the Bollinger Band. It pushed outside. If I follow this line straight down, I'm down to the 20 on the RSI, or very close to the 20 on the RSI. If I come down to the stochastic crossed, and it's beginning to go up into the buy. So yes, if you look at the candles, it bounced all the way back up to, and this is an hour chart, so you can see it took a while, but it still went up. Now you can actually catch, how many pips would this have been if I went straight? You see, that would have been about 57 pips. So from where this took, and if you would have stayed in this trade for about a good hour, you could have got 57 pips. Now, what I do with these trades is I take the trade, but I continuously move my stop loss up. So initially, as soon as it gets a few pips above, I'm moving my stop loss above my entry, a few pips above my entry, and I'm letting it ride up. The typical average of what you're looking for is on average, you're going to get about 10 to 15 pips. That's what you're looking for, and that's what you're going for. But then you're definitely can keep going. You don't necessarily have to get out of that trade, but once you get to that 10 to 15 pip goal, once you hit that, move your stop loss up so you don't lose. And as you can see, that it's going to continue to rise. And when it does, depending on where you put your stop loss, it retraced a little bit, but then it went up and it's going to hit the top of that Bollinger Band. As I showed you last week, all of the trades, what do? There's some consolidation right here, but they're always going to go from the bottom to the top of the Bollinger Band. And if you follow the strategy and you follow the rules, you're gonna be in profit. And let me not say always, but you focus on the strategy, and if you focus on the skill set, that's how the money comes, and that's how you end up in profit, is following the rules. Because you don't want to jump in a trade like right here. You see two indicators. It's pushed well outside of the Bollinger Band. The stochastic looks great, but look at the RSI. That's what these tools are for. These tools are to help you learn to identify how to navigate through the charts. That's exactly what these tools are for. And there are so many different strategies in here that as you begin to navigate through, I mean, look at how many different strategies there are. That's what this web analyzer is for. It's for you to go through here, watch the videos, learn the skill sets, and look at what if best fits your personality. And we can begin diving into these strategies, looking at these different skill sets so we can maximize and get the best out of this, because everyone has a different personality, and we want to maximize this web analyzer to its full capacity. So, I mean, the trades, they're still coming in. You know, as we're talking, we just had 2 to 3 different trades come in as we have been talking. So this is a potential buy. So with this being a potential buy, it's pushed outside of the Bollinger Band, but the RSI is not. That's why it's called a potential buy. Because yes, it's giving you the potential trade, but there is still some analysis that you have to do. There is still something that you have to dive into. You still have to do a little analysis. The stochastic, look what the stochastic is doing. It's pushing up. It looks great, but that RSI does not. Now let's look at the other one that came in. Same thing. The only thing that looks great on this one was a few minutes ago, and this is a 15-minute chart, so it's still not, none of it looks right, because we're in a 15-minute chart, and this is not even pushed outside the Bollinger Band. The RSI is in the middle, and the stochastic. So these are potential trades. Now, you might be able to look at it on a different strategy, but on the strategy that we're looking at, which is the Sharif strategy, this is not a trade that you take on this strategy. Now, if you apply it to a different strategy, you might be able to catch some pips on a different strategy, but not on this particular strategy. And that's why it's a potential buy. And that's why it's good to go through and learn and understand the strategies. That's what that is for. And then, let me see. As I do want to, there's another, I'm going to try to change the share. Because there is something, we talked about the bounce back. And there is something I want to share with you. See if I can share this. There's definitely something that I want to share with you. Now, with the bounce back strategy, I do want to, I know there's a way that you can analyze it, but what I like that IML has done, because there's a strategy called the bounce back. And I have all the steps to the bounce back, but what IML has done is they have taken it and they have condensed and consolidated it and put it in what's called the bounce back, as far as IML bounce back. And so they've taken a strategy that takes quite a few steps to analyze a trade, and taking it to where you can condense it using the IML bounce back to where you can analyze this trade with just a few steps. But before we go here, I'm sorry, we have a few people on the call. Do I have any questions? Because I'm just talking. So do we have any questions or comments or anything about what we just went over with the Sharif strategy, or anything before we move forward or go anywhere?
What is the Bollinger Band?
The Bollinger Band?
Yeah. Yes. What is that?
Let me see. Let me try to pull that back up for you. Just a sec. Let me stop the share and pull that back up. I'm sorry, it's coming back up.
Okay.
Mm,
You can still hear me, right?
yes, I can.
Okay.
In a nutshell, like can you? Oh wait, do I have the right thing up here? Uh-oh.
I seen you pointing it out.
Okay, this is a Bollinger Band.
On both sides, right?
Mm-hmm. This
Okay.
is a Bollinger Band.
The clear blue.
And correct. You see it right here?
Uh-huh. That's
So
that's the Bollinger Band.
right. I know the guy's name was I'm trying to think of the correct technical Dr. Byfwood. I know his name was John Bollinger, the gentleman that developed this, but I know it's a technical analyst too.
Okay.
That it's a statistical analysis. I know it's a technical analysis tool that I'm trying to think of the right words to.
So let me help you out. The Bollinger Band is simply an indicator designed to give you and I, based on the moving average, what is a potential buy, potential sell. And depending upon what strategy that you will be taking advantage of, is just a confirmation of an indicator. And all the indicators are relative to what type of strategy you're going to be using. In some trades, the Bollinger Band may not be of a necessity, but for this particular trade strategy, to get the maximum entry point and exit point, then you would use the Bollinger Band as a confirmation of a particular currency pair. And that's basically what all of the different indicators are utilized for.
So it's like a digital GPS map for tracking currency trade.
Yeah, for any movement in the market, that's what it's designed to do. It's going to be an indicator of how many potential buyers are in the market or how many potential sellers are in the market. So the most important thing to understand about the Bollinger Band is the crossing points of the moving average for potential buy. When those two lines cross at the 80 point, that's going to give you an indicator that it could be an ideal time to enter into either a purchase if it's below 20 or a sell if it's above 80.
I see.
But also remember the importance of enrolling in an academy is going to guide and direct you through those points of understanding. And depending upon what type of trade strategy that you're taking advantage of, then those particular indicators may be more relevant than others at the particular time. But for this particular trade strategy, one of the confirmation tools that we utilize would be the relative strength index, the Bollinger Band, and the stochastic. And all three of those, based on this particular rule of this particular strategy, have to be in alignment for you to ideally enter it into that trade from a profit standpoint, whether it's a buy or a sell.
So you're saying all three of these, you're saying the Bollinger Band, the RSI, and the last one should somehow.
The stochastic. Yeah. Yeah. And that's all going to be based on the particular rules of this Sharif strategy. And you will have the opportunity to have all of that annotated when you go through the IML Academy.
I see. So
the different trade strategies will require different confirmation tools. But I just wanted to make sure that everyone understood from this particular standpoint, that's what the indicators are utilized for.
I see. Thank you.
Yeah.
Now, thank you so much, Mr. Rogers. So let me change this over. So any more questions or comments before we move forward? So, okay. So just this one.
Just and also before you go on, Ms. Dyer, I want our guests and I for you to understand a lot of this information. For those of you who are new to this information, this is the power of the IML Academy and why everything starts with the Academy. And once you understand the academy, the verbiage, because this is a new information, this is a new language for most of you. And that's one of the things that our market live have done extensively and extremely well. They've taken tremendously what most people would believe as complex financial verbiage, and they've simplified it. And now the tool that you have that she's sharing with you is no different than the tools that the big banks of the world utilize. And the reason why we're so excited about this particular tool is it gives you the same analytics as the big banks of the world utilize. I mean, you're talking about the Morgan Stanleys, you're talking about the Goldman Sachs, and literally because of this information that you're now receiving and a recipient of, you literally have the ability to operate and do exactly what the banks do with your income every single moment, every single day, and now have the ability to participate in the market because this is a 24-hour day, 24 hours a day, 5 days a week. So when most people are sleeping, you now have the ability to understand how to make your money work for you and do exactly what the banks are doing. So I just wanted to add that as well. Back to you, Ms. Dyer.
Okay, I'm sorry, my phone technical difficulties. So what I was saying, I don't know if you all heard me, is what so thank you, Mr. Rogers, is what I was saying is that what he was just explaining about what the Academy has done and what IML has done, and what I was explaining as we were transitioning is the fact that what IML has done is taken the information to be able to analyze a trade and collapsed it to where you do not need a lot of information to be able to properly analyze a trade, to be able to properly to take a trade. And that's what I love about this. So take a mental snapshot of what you see right here, and I'm gonna back up and I'm gonna show you exactly how this was done. Now, there are two different gentlemen on this. There are two different ways you can analyze this trade. So one, of course, and once again, it's about your personality. So it's the exact same trade. This is a Euro USD, and this is a 4-hour time chart that this trade was called on. Now, as you can see, the way that he utilizes this is he'll take this same trade and he uses the RSI, what we were just using with the Sharif strategy. And we come over here to Stevenson and he uses what's called the MACD. And what this does is it uses the moving average. It focuses on moving averages. So it's the exact same information. But it's just using a different indicator to analyze the trade. So this one. So what happens and what we do with this information is first, okay. So first what we want to do is we want to bounce down of 2 time frames. So to analyze this trade, we want to go down 2 time frames. And so when we take it down 2 time frames, what we want to look at is what was this when was this trade called? So this was called at 1.14245. So I'm gonna mark it back up. I'm gonna mark this chart back up. 1.14245, right? So what IML is telling you is this is where you want to enter that trade. This is where I want to, let me change the color to make sure everybody can see it. So this is where you want to enter this trade. But how do you know when it's a good trade to enter? And another thing, so what I'm going to do is I'm going to put my trend line on there. Now, this trend line, it doesn't matter the time that this trade was called. You want that trend line to make sure it includes your entry. So that's something else that's very important. You want that trend line to include your entry, because this trade has been sitting. And if a trade is called on the hour, that trade is going to go a lot faster. If it's called on a 30-minute chart, if it's called on an hour time frame, that trade you'll get into a lot faster than a trade that's called on a 4-hour chart. So for example, this one was called on a 4-hour. So it hasn't been moving as fast. And then also the simple fact that this is also a Euro USD. So because it's Euro USD, that market is not open right now. Euro is open, that market opens around 4 o'clock in the morning. Somewhere around there. It's that market is closed. And this is a US market. So these markets are closed. So but yes, it's still moving, but it's moving slowly. And then it's on a 4-hour chart. So understand that this is going to move slowly. But yet you can still see there's still movement. So you still can go down to the 15-minute chart, because what's going to happen is I'm going to get a more precise entry. Now, remember, and what IML has done is they've taken this information and they've collapsed it to where now when you have this information, we know our entry point. We have our trend line, because when I draw my trend line, I'm looking at my highs, and I'm going to take it back up so you can actually see it. I'm looking at my highs, and I'm looking at my lows. So this is the lowest of the low. This is my lowest because I'm looking for a sale, I'm looking at my buy. So when was the first buy? All the way to the last buy. And remember, I'm going as far, no matter when this trade was called, I'm still using it all the way up through here, because I have to break my entry point. So this is my trend line and this is my entry. Now, I'm going back down to my 15-minute chart. Now from here, now I know those two things. The only thing that has to happen now for you to enter the trade is because when this begins to go into a sell, when the sale starts to happen, when these candles turn red and it begins to go in a down position, in a downward trend to go into a sell, it's going to break the trend. And it's going to go past this entry, this call price, because they made the call price. But what is going to confirm a trend change is going to, this MACD is going to, these two lines in this MACD, which is my signal line, they're going to move across the histogram. And when they cross that histogram, that confirms a change of trend. Because right now I have a uptrend. But if I'm going to get in the market on a downtrend, on a sell, I don't want to get in the market on a sell until I know the trend has changed. So for me to get into the market on a sell, on a downtrend, I want to know that the trend in the market has changed. And when it crosses that histogram, that's when I know it's changed. So all you have to do, know what the call price is. And I mean, you can eyeball it or you can put the line there like I did. Draw your trend line. Make sure it breaks the trend line. Make sure it crosses and breaks the histogram. And now you have a sale. You have a trade that you can safely enter. And when you do that, you can literally, right? I'm going to show you just how many pips you can catch off of this. Well, first, let me show you, you want a tight stop loss. I'm going to show you how you do your stop loss. You want to, your risk reward should always be 1 to 3. I mean, you should always have a tight stop loss when you're doing longer trades. So if I look at, I'm entering, and you saw I just came back. So I'm looking at, if I'm entering down here somewhere, if I'm entering down here, I just went down to the 5-minute chart. And if I want a more precise stop loss, I can go down to the 1-minute chart to make it even tighter. But my stop loss is going to be somewhere around here. I'm making it tight. My stop loss is always tight. And so when I go back up to that 15-minute chart, look how tight that is. That's my stop loss. I always have a tight stop loss. I'm using the candles to make a tight stop loss. That's the high of the high. I made a tight stop loss. But the beauty behind it, so I'm not losing. If that trade turns around on me, right? I'm not losing. I'm not losing much. And I'm trying to collapse this so you can see what your potential is. What your potential gain here is. Because if I'm getting this trade somewhere around here, well, before I do that, you're looking at different, you can set different take profits, right? You can have your take profit 1. Look at this candle, right? Because you have to remember, when you have a trend, when the trend reverses, it's going to hit those trends. It's going to hit those reversal points. So it's just, when does it hit those reversal points? So you're looking at a trend reversal. It can either hit here, here, or you can push it. You know, you can push for it, but it's up to you. What are you looking for? So I can take I got 30 pips right here. These trades are literally good typically for anywhere from 30 to 50 pips, honestly. And look at that. If I hit a take profit 2, that's 83. Because this one was caught on a 4-hour chart, on a 4-hour time frame. You can almost guarantee that you can get about 83 pips off of this. But what I do is, when I know I get close to here, right, I move my stop loss. As soon as I get somewhere in here, I move my stop loss up. So I know that my stop loss is now in the trade. So I'm not losing money. If it revert, I'm in the trade. I'm in the money. And so when I get to take profit 1, I move my stop loss up. So I'm continuously manually moving my stop loss up. So I move my stop loss up. And so
this is Xavier. How you doing? Quick question. So you don't do you use the trailing stop at all?
the trailing stop loss only works on your computer. So if I'm on my phone, or if I'm on my tablet, or something like that, I have to manually trail it. But the trailing stop loss only works on your computer. But if you are on your computer, then yes, I would highly recommend you use a trailing stop loss. But the trailing stop loss works on your computer. So if not, then you have to use a manual. But there is an app. What is that app? like call levels. It's an app called Call Levels or something. Like it can send you alerts. So, or you can do alerts through TradingView. It's an app for everything. So you can literally, like when you can put the currency pair in there, and when it can notify you when you're ready, when it hits that level. Like if I want to be notified when it hits this point right here, okay, it's going to send me an alert. And I just go in and I move my stop loss. And it's an app called Call Levels. Because the trailing stop loss only works on your computer. So, any more questions? Questions, comments?
We all here.
Okay, let me see, because this one was called on Friday. So I don't know. Let me see if I can show you, because I know it was called Friday. I'm going to try to see. Well, even if, like, regardless of, let me see. Like I said, I know this one was called Friday, so. Now, has anybody experienced with the bounce back? Anybody on here experienced with the bounce back? Or even the Sharif strategy that we went over first? So that means this was called way back. Way back here somewhere. So drop down 2 time frames. Oh, goodness. Let me see. I might just go back and just do one. Let me just look at it and see. Hold on. So without going all the way back there to try to figure that out, if you just look at this, right? I can just line this up. And you can see right here. You can see it. You can just see where you can look at these. And you can see the trend. When you see, you can see the trend change. So you can see where the blue line crosses. And when it crosses that histogram, you can see how the trend is in a buy position. And then look what happens. It follows it. Sell, crosses histogram, sell. Buy, it crosses the histogram, it's in a buy. It crosses histogram, it's in a sell. It literally follows this pattern. So if I'm gonna drop down these 2 time frames and I'm trying to take a trade, if you're trying to take a trade and I'm drawing, you see that's a trend line. As you can see, when it comes through and it breaks that trend line, but I would not get in that trade until it breaks this histogram. And when it actually breaks it, as you can see, even though it still had a little movement up and then it comes back down, you can see it broke it, but it's still down, and you took profit. Because where you going to get it? See how when you drop down to that 5 minute and you set you get a more precise because you're looking at the candles, but you see how it always goes back to that trend, always goes back to where it was before. And they just didn't have a lot. They had some news, so they didn't have a lot of trades called. Now, so of course we're gonna do this again, but they only had one call today. But if you look, these were Friday, so they had 4 called on Friday. And so the reason why I wanted to give you more than one strategy is because, I mean, it's so many different strategies. We sit on here with Pastor Isaac, and he's gone over quite a few strategies. I mean, he's done a lot. He talks about a lot of different strategies. And I mean, you know, and we've done some scalping strategies. And then now this web analyzer. And I wanted to show you, I mean, look at what's happening in here. Look at how many different strategies are within this web analyzer that we can literally take advantage of. So there is literally no excuse not to profit. There is no excuse. You apply this information, you dedicate yourself to the education, you learn the tools. There is no excuse not to profit or to be in profit, because there is a strategy, there is a technique, there is something for each and every last person's personality. And so when we look at, like I say, the Sharif strategy, we have, I mean, look at how many trades have been called. Okay, it's not, I don't think, it switched over. So hold on. So you look at the Sharif strategy, I was showing this and it didn't switch over. So, but look at, this is what I was saying. Look at how many different, in the web analyzer, look at how many different strategies and how many different techniques that are in there. So it's something for everyone to profit. And you look at the different, look at how many have been called. Look, I mean, 10 minutes, 25. I mean, it's something called almost every few minutes. There's a potential trade called. So it is an opportunity for you to always be in profit, an opportunity for you to always be in profit and be in a potential trade and to be in the money. And then the bounce back strategy. So there is always something for you to profit off of. It is always something for you, no matter what your time schedule is, your time frame is, if you're a morning person, a night person, if you want something in the middle of the day, no matter what your schedule is, no matter what, it is always something for you. And this doesn't even touch everything, because we haven't even touched the harmonic scanner tonight. We haven't touched on every strategy that there's so much that this academy offers, and it's so much for everyone. And so this is just the tip of the iceberg. And this web analyzer can definitely, while you're learning and you're earning, is going to definitely put you in a profit. And I highly recommend that you dive in and take advantage of it. And So what I want to do right now, of course, is open the floor for questions before I turn this call back over to Mr. Rogers. Okay, so if we don't have any questions, if we don't have any questions right now, I'm going to go ahead and turn this call over to Mr. Rogers. Mr. Rogers? Let me see, stop. So what I want to do right now is, so if Mr. Rogers doesn't have anything for us right now, I want to go ahead and transition this call. And the next person that I want to bring to the table, of course, is our business partner. That is Dr. Craig Bythewood. Now, this gentleman has over 25 years in finance and economics. He has a PhD in finance and economics, and we are going to transition this call to a talk with the finance doctor. He is 100% documented. He has 100% of the information, and he is helping